All right. Hey, friends. I hope you're doing good this morning. I'm going to share with you thoughts on my very first independent angel investment that I made just last week. I'm really excited about this. I wanted to capture the thought process that I went through and why I chose to invest in the company that I invested in. Now, of course, I've got to give you the legal disclaimer. Angel investing is not for everyone. It takes a specific skill set to be able to evaluate these opportunities. I know it's a popular thing. So just be careful, make your own decisions about investment opportunities, talk to qualified professionals, get their opinion. But if you're looking to be in an angel investor, either now or in the future, I just wanted to capture the thought process I went through in case that helps you. One of the things that I love about investing in general is just the chess game that you have to play. This idea of thinking through strategically what the opportunity is and what it's going to be in the future. If you think about it in a stock investing perspective, you have to think about it, a rate's going to go up. And if so, if you own a tech stock, is it going to plummet? Who's the next CEO of this company that you're investing in? And if that changes, will it affect the value of the company? All these different factors that go into investing. I love that proverbial chess game that goes on. And I've had the opportunity to do due diligence, to research companies, both from a stock investing and a merger and acquisition perspective in my day job. And, that process is a lot of fun. So I've been thinking more and more from my own perspective about angel investing. I've done it as part of a family group. I've helped other people evaluate angel investing opportunities with my background in finance and startups, but I had yet to make my own first independent angel investment. And so I did that. And I want to sort of walk you through the various things that I thought about as I did it. And the best part, and you'll want to pay attention to this in the notes, I'm going to link to, I went ahead and captured a template that I created to help me do my due diligence on this company that I was investing in. And I'm going to put a link to that you can check out in case you were ever thinking about angel investing, or maybe you know someone who would like to angel invest and have a template like that. So some reasons that I invested in this company, and I'm not going to tell you the company itself. Just going to hold back on that for now. But let me run you through, I think it's 8 or 9 different reasons that I invested in the company. So the first thing that attracted me to the company was that I knew the industry really, really well. What I will tell you is the industry they're in is what's called the alternative credit scoring industry. So if you're in the US, we have these credit models that are antiquated and old. They don't look at as many factors as are now available. And so alternative credit is a place that is sort of growing in the US, particularly to help people who don't have traditional credit files to get loans. And so I know this space really, really well. Having been a former C-level bank executive, I was also on the advisory board to one of the largest credit bureaus in the United States. So I've known for years now that alternative credit was something they were keeping an eye on. And so I knew the industry really, really well. And so I felt comfortable with evaluating the solution that this company is building based on my industry knowledge. The second reason I invested in this company is I had actually built my own solution in this market before. So one of my early startups, a company called Cathedral Leasing that I was co-founder of, was in the small to medium-sized business lending space, actually for equipment lending and leasing. And I was one of the co-founders because I had previous to that developed a proprietary algorithm to evaluate small business loans differently than traditional lenders would look at it. And so my algorithm leveraged alternative data to help lenders make these types of loans. So not only did I know the industry, but I had built my own solution that was an alternative scoring. And so I felt really, really comfortable with the space. Another thing that really attracted me to the company was they have some pretty solid traction. Now they're what you would call pre-seed. So this is their first outside funding round outside of the founders putting money in. They're raising $1 million, by the way, at a $12 million valuation. And I'm going to talk about that in a second, but they had some really good traction. So they were able to share some milestones with me that they had accomplished. And those were really, really significant. Including signing 2 key strategic partnerships with key distribution partners that are going to have committed signed letters of intent to using their solution. And so that meant a lot to me. When you get companies the size that these partners are agreeing to use the solution, that's a really good signal of some solid traction. So that was the third reason I invested in them. I talked to you a lot about the need to have a strong team when you're a startup, that investors, a large percentage of their decision is on the team. I was no different in this decision. I evaluated the team. There are two main founders, two main co-founders. I evaluated them. In particular, one of the co-founders has been in the lending and credit space for almost as long as I have. And so I felt really comfortable having someone with that specific skill set and knowledge being a co-founder in the company. I felt that he could help steer them with the right decisions as their model starts to build out. And that meant a lot to me, that he would understand the pain point already. There wasn't going to be a whole lot of education that had to occur. And so I felt really strong about the team. The other founder, I believe, has a technical background and has exited multiple startups before. So that added even more confidence to the team dynamic when I was evaluating it. I talked about the valuation. So the fifth reason that I decided to invest in this company was the valuation was very positive. So I'm getting in at a very, very early stage. The company is raising $1 million. No, I did not put $1 million into it. The company is raising $1 million, and it was at a $12 million valuation. I felt that was extremely reasonable, particularly going back to this idea of these strategic partnerships that they have signed. I can really see the company growing and that valuation growing. At a $12 million valuation, if for some reason they were successful and they hit $120 million valuation, then I would 10x my money. If they became a unicorn and they were over $1 billion, then I would 100x my money. Now, that is not why I made the decision to invest, not because I was convinced I was going to just make a ton of money. Certainly that is why an investor invests in a company, but I didn't let the idea of all this money I theoretically could make cloud my judgment. I focused on these reasons I'm sharing with you. So the valuation I felt was very, very positive. The sixth reason I invested was a low entry cost. So since this was my very first independent angel investment, I didn't want to put a ton of liquidity into the company. I wanted to do enough that it would be a really nice return if they were successful. But the cost to become the minimum they were looking for from angels was reasonable to me. And so I was comfortable putting that money at risk. That's a key point for you to know. I was comfortable putting that investment at risk, basically lighting it on fire, meaning if for some reason something happens and this company doesn't make it, as many don't, I'd be disappointed, but it wouldn't kill me or my family financially. The seventh reason that I decided to invest in this particular startup is I was gathering information. I wanted to think about maybe more about my own startups in this particular area. And so having insight to the decisions this company is going to make allowed me to sort of have additional inside information and intel into the alternative credit space. So I wanted to have that insight. So I just, also looked at my investment as an educational cost for learning more about the space, since I'm thinking about it more and more myself. And probably, I would honestly tell you that the biggest reason I made this decision, and this one's going to sound maybe a little odd to you because it's not necessarily about the potential return on investment. The biggest reason I made this decision is just the experience itself. I told you that I've done due diligence on startups and I've advised investors on startups, and I've had my own startup and worked with investors, and I've done mergers and acquisitions work, and I've done lots of due diligence that skill set can transfer over in this instance. But I haven't had to put my own, I've done it as a family. Even I've invested in companies. Our family has invested in companies together, and I was a large part of that decision and that process, but I had yet to experience it solely for me, solely with my money at risk. And so I just, again, saw this investment opportunity certainly as a good one, or I wouldn't have done it. But also, if they failed, I just saw the money that I could lose as a cost of education. And I feel like it's worth it. I'll learn a lot having done the due diligence on this company. And I learned a whole lot capturing a template, as I talked about, that you can take a look at. creating a template to do further or do more due diligence on other startups as I look at more angel investing. The process of creating that was valuable to me. The process of what I look at, and then the process as this investment carries forward, getting updates from the founders, maybe even having the opportunity to participate in meetings with the founders to talk about what they're working on and the traction that they're having. Just the experience itself was very, very valuable to me. And so I was willing to put that money at risk. So I hope that information helps you. One thing I did leave out that I want to share with you, that where did this opportunity come from? It actually came from a community that I'm part of. Communities is really important. Find areas that you are interested in learning more about. There are all kinds of Slack groups out there. I was part of one. Someone posted that this company was raising money. I had been thinking about making my own first individual angel investment. And so I basically jumped on the opportunity, got an introduction to the founders, talked to them, did my due diligence, made the investment last week. I'm really excited about it. I'm really excited about how it diversifies my investments. So up till now, individually, just done a ton of stock and cryptocurrency investing, had a lot of success there. I feel like that process allowed me to be more prepared to make this particular investment. All my time working with startups, all my time being a startup founder also benefited me. And so I'm really excited about the opportunity. I hope those 8 tips help you. If you can think of any, I'd love to see your comments below. And again, I'll link to this due diligence template that you could check out. Until next time, hope you find your voice. Have a great day.